You just incorporated your medical practice, and now you're wondering, do I still file a personal tax return, or does the corporation take care of that now? The answer is yes. You still file a personal tax return every year, same as before. Incorporating doesn't change your requirement to file personally. It's additive. You've now got a second taxpayer in the picture. When you incorporated, you effectively created a separate person. Your corporation is a separate legal entity and it can own things and earn income just like you. That's how our legal system works. It also pays its own tax on that income, and it files its own tax return every year, even in a year where it does absolutely nothing. Now, what about the personal tax side of things? Nothing changes about whether you file personally. What does change is the complexity and flavor of your personal return. You're probably going to be paying yourself uh, either salary or dividends from the corporation, and that income will show up on your personal return. Why does this matter? Because your corporation can't pay for your personal expenses, your groceries, your mortgage, all of your other day to day costs of living that keep the lights on. And that's why from now on, your personal and corporate tax returns are related. They affect each other, which means that tax planning can never be done in a vacuum. What I see a lot is people focusing on one side, often the personal side, because that's where a lot of good financial planning information is available, and the corporate side doesn't get the time and attention it deserves. Or sometimes it's the other way around. But your goal is very likely maximizing what ends up in your pocket personally after tax. And the only way to get there is tax planning that looks at both personal and corporate together. Anyways, I hope this was helpful. If you have any questions, please drop them in the comments. Thanks for watching, and I'll talk to you soon.